Dan, what's up? Long time no see. It was all of overnight.
Long time.
Hey, Dan, let's talk some Boeing. So, I mean, look at. Do you want to try and look at this as a company with such a good track record that any price, below the high is still good, or are you looking at all the steps Mike and I just discussed before these planes start getting back on track?
The former as opposed to the latter. I mean, I still think when you look at this company overall that the trends are in place. And yeah, I think they're taking the right steps. And as far as the timing of how they unfold, it may affect the stock in the short term. But longer term, Oliver, I still think this is a stock that, that you want to own. I mean, we have it in a lot of our portfolios. So I can tell you that, I think any kind of weakness here, I think, is a buying opportunity to the stock, because I do think ultimately they will get through this and they'll come out the other side stronger. I know you pointed out that will people be concerned about getting back in the planes? Possibly, but I think that will fade over time, particularly as they step up their security steps. And I think back to the Audi situation in the late 80s. Now, I mean, there was a braking issue, and Audi really got hit hard, had to revamp. But now look at how Audi's doing nowadays. Now, of course, many years later. But the idea is that these companies, I think, longer term, are still in a position to be very profitable.
So, Dan, how do you do this? You're looking at just buying outright, upside exposure. What do you see as sort of the best way to handle a stock like Boeing?
Well, Boeing, so the one thing I want to point out in this trade example, Oliver, is the markets are fairly wide, so that's something to definitely consider if you're looking in the options market on Boeing. But the one way to play it, I think, especially pre-earnings, and I think you see this from a technical standpoint, you see this upward trend that's really exploded to the upside back above the 50-day and 200-day moving average. It looks like it's got a nice upward trajectory, is looking at really just buying a call spread here. Again, that call spread at least limits some of your downside exposure if we do see a significant upheaval here or weakness in the stock over the next month. But I like the idea of participating the upside here going into that earnings announcement in October, which is about 5 weeks away. So I'm looking at October call spread, a 380-400 call spread, and you can put that on for about $7.50 in this example. And again, you got a better than 2-for-1 risk reward on this, and you are going to at least limit your downside risk if the stock does get hit.